Hi there, very good morning to all our viewers who are joining us live on this broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacey Pereira. And if you look at how we left off things on Friday, well, the Indian benchmark indices, both the Sensex and Nifty, were rather flat in a range-bound manner that we could say, but the Nifty has managed to keep up to that 24,800 levels, and which is why we're also, how is that really going to impact our day and trade? Joining me now is Ajit Mishra. He's the Senior Vice President of Research at Religare Broking. Good morning, Ajit. Always a pleasure to have you with us here on the show. Let's just first look at the levels we need to be tracking for the Nifty as well as the Bank Nifty. Now, Bank Nifty has seen quite some interesting swings compared to the Nifty. We are looking at those somewhere around 51,500 levels. Also, if that is something that you are tracking for the Bank Nifty, and also give us the the charts or the numbers that one should look out for the benchmark itself.
Yeah, good morning, Stacey. So yes, it's been 2 weeks now that we have been seeing the markets, gradually inching higher, and we are almost just a percent away, less than percent in fact, away from the record highs. So till last week, we saw that barring banking, majority of the sectors they are doing all the support to the markets and helping the index to inch toward the record highs. Despite the profit taking in the IT majors in the last trading session. So we feel that this tone is likely to remain positive is what the indications are, because global markets which were on the sidelines before the Jackson Hole event also resumed the uptrend, and the US market is set to make a new record high as well. So since we are largely focusing on the global clues, especially the US market for indications, and there we are seeing conducive environment. So I wouldn't be surprised that if we test new record high in a day or two. The important aspect, Stacey, for us is how we're going to approach that level, and means the momentum, the pace of rise is something that participants should be focusing on. So we feel that without banking, it's difficult to maintain the momentum or to regain some strength. Other sectors, yes, like IT, energy, they can help the index to maintain the positive tone. But for momentum, we need a participation from banking. But still, we feel that one should continue to buy on dips until we break 24,500.
Right. So within the banking pack, how does it look like? Because we are seeing the likes of, an HDFC try and come and participate, and you're seeing some good moves there. But it was the private banks, at least the whole of last week, that did see some bit of pressure. But then on the other hand, you had NBFC names like a Shriram Finance, which was trying to hold out and give some kind of strike. So within the whole financial space, how would you advise one to go about, especially in where we are currently placed? Not just the Bank Nifty, but its components. How would you want to, if somebody wants to actually look at the banking names, which one would you be suggesting?
Right. So, the most important aspect is that the private banking majors, the top three names, HDFC, ICICI, and Axis. We have been seeing some sign of consolidation at the lower end, but the lack of decisiveness when it comes to recovery is something which is bothering the market, and especially the banking index. So first, our focus should be more on these top three names. Last week, we saw some buying interest emerging in ICICI, and it ended on a strong note. But we need similar kind of attraction in HDFC and Axis Bank too. So once we have this alignment, obviously, then we can inch towards 52,000 mark, in the banking index, and that would further fuel the recovery as what we are eyeing. Other than that, we are seeing stock like Federal Bank, Kotak doing well as well, but the focus should be on the top three.
Right. So focus among the top three. So you have HDFC, ICICI, and Axis is what Ajit is suggesting. Look at levels in those specific ones, and that could also then take the bank index to somewhere around 52,000 levels, and we'll be waiting for those because it has been hovering in that range for some time. It managed to break past that 51,000 levels after really long news flow among your laggards. So HDFC and SBI Life, those two insurance companies, and of course we do have news flow that has come over the weekend that is going to also, impact this kind of news. But like we were talking about, let me go back to Ajit and get a sense of, how one should be. We are at almost the last, bit of this August series. If one really needs to place their or give an F&O strategy to our viewers in where we are placed right now, what would you be suggesting?
So yes, Stacey, since we are closer to the record high in the last week of the expiry also, so I feel that one should definitely stay put on the positive side, considering the market tone and the buoyancy that we are seeing on the rotational basis across these sectors. So though the positional support is at 24,500, but I feel that the way the markets are opening and we are seeing some buying interest emerging in the banking majors also. So we should hold this 26, 600, 650 zone also. So that should be your support. But since we are seeing volatility still continuing, the prudent approach is to go ahead and initiate a bull call spread. So let's say buying 24,800 call and shorting 25,100 call is something, a strategy that one can make for this week.
Right. Interesting. Let's also get our viewers up to speed with a couple of stocks they need to be watching out for. Like I mentioned, ONGC, that one is going to be interesting to watch out for because they've started production on their 5th oil well from the 13th that they have in the KG basin. This one being, from that 98 cluster 2. Earlier, remember, in January, the oil production had commenced for that 4th out of the 13 wells that has already started flowing. So gas production advances with the 3 of the 7 wells are now completely online. So this is definitely going to be a positive for how we are going to look at oil or at least the likes of an ONGC. But you also have, interestingly, a note that has come out from HSBC oil marketing companies, at least not the producers, where they continue to maintain a buy on the likes of an HPCL, a BPCL, as well as an IOC. They've raised the target for the likes of an IOC to about 200 rupees from the 180 that it was earlier. They've also kept the target for BPCL. They've in fact cut that one to about 460 from 470 that it was, whereas the target for HPCL has been raised to 480 versus the 440. So interesting to see how oil marketing companies will be reacting. There is, divergent in terms of news flow that is coming in and how they've been reacting all this while. HSBC also goes on to say that the downward orientation for global oil prices is quite positive. Though, over the weekend, we've seen a different kind of reaction after those escalation of war between Israel or in the Middle East. And that could definitely be that immediate headwind that you see that could keep the lid on gains, at least, though the strong marketing margins will offset the weakness in GRMs, is what HSBC notes for these oil marketing companies. Let me also tell you about Zydus Life Science. Now, this one is in the news because its subsidiary, that is Perfect Day Inc., which is also a Temasek portfolio company, has signed an agreement with Perfect Day to sell about 50% of its shareholding in Sterling Biotech. Now, following this transaction, Sterling Biotech will become a 50-50 joint venture with equal board representation, and the JV will also be established to manufacture at least the production of fermented animal-free protein for a global market. So this is quite an interesting news coming in there for Zydus. Now, Citi has a sell call on Zydus Life. They've kept the target of about 890 rupees per share. They have also spoken about how Asacol HD has finally got that generics approval, and now remember it comes in competition to Zydus Life, and this is produced by Teva, and Teva just received that US FDA for Asacol HD, and it will get that 180 days exclusivity as well, which means that Asacol is likely to have contributed somewhere around 140 to 160 million of sales towards for Teva in FY24. Now, with this launch, of course, it's going to for the likes of a Zydus Life, it's going to see that production fall by around 40 to 50% is what Citi is saying from the current levels, because there is another competitor in the market. and the impact of competition will perhaps be reflected also in their valuations. But quite interesting to see, and I'll ask maybe even Ajit to come in there on, give us what the charts are suggesting for the likes of a Zydus Life, because you are seeing, positives in the sense that they are how they are reacting to this whole news flow. They are, ready to hive off or at least get into this JV situation. Citi has a sell call, and that is perhaps how the stock is reacting today. But, particularly for Zydus Life, how would you be looking at it? And also other stocks within this space, if one has to take an alternative, what would you suggest?
So, Stacey, Zydus has had phenomenal surge. If you'll see the movement in last 8-9 months, the stock has moved up from 550 to 1300 plus. So it's a phenomenal surge that we've already seen in the stock, and now we are seeing a bit of a cool off at the higher levels, and it's common in the other pharma counters also, which have seen a tremendous run in the recent past. So I feel that stocks which are showing relatively higher strength, so stock like Sun Pharma, wherein we are still seeing the positive tone continuing. Then we have Lupin, Stride, Outcode. All these names, they are consistently, maintaining the positive tone. So in case if somebody has to replace or look for fresh long, then Sun Pharma is a better candidate. Yeah.
Right, so you would keep your bet somewhere around Sun Pharma. You also like Lupin within the pharma pack. But let's also understand what's happening with IT stocks, because that is going to be in focus today after all of those commentary that has come from the Fed. Now, Jefferies has put out a note on IT stocks. They do see how the Nifty IT index has pretty much outperformed Nifty, at least in the calendar year 23, by about 4%. White date, if you look at, despite those EPS cuts that most of these companies saw. Now, the large caps have outperformed compared to the smaller ones, and have seen a, smaller bit of EPS cuts as well. So those estimates really help them. Now, the recent up move, though, that we're seeing in IT companies may be led more on the technical factors, is what they are pointing out, at least what Jefferies is looking at. They do continue to like TCS as well as Infosys, and they say that is given the lower risk to their EPS cuts as well as the valuation comfort that these stocks hold. But Ajit, would you also think that, we could see a turnaround for IT stocks now that we know that that rate cut is coming, and we've been waiting all through? Their earnings have just been dismal so far. Do you think we can actually hear some positive news and one could be looking back at IT stocks now in a big way?
Certainly, Stacey, because it's been almost nearly 2.5 years of underperformance that we've seen in the IT majors, and now finally, of late we've seen that majority of the names, they have reclaimed their record highs. So I doubt that this move is likely to fizzle out anytime soon. And yes, we could continue to see some bit of volatility because we are at the record highs. But if somebody is having a medium to long term view, definitely they should stay invested in IT. And from shorter point of view, also I feel that top three names like Infosys, TCS, HCL Tech, combined with some of the names from the mid-cap IT basket like Persistent in Tech Mahindra, is something that one should keep on radar.
Right. So from the mid-cap space, you're looking at Persistent as well as Tech Mahindra, and of course, keep your big heavyweights also on the radar. There is, chances and buying opportunities you should be looking out for even when it comes to IT stocks. Well, then, Ajit, I'm going to ask you to keep your, keep ready for our viewer queries as we get them, try and give them, some suggestions, and also try and get them a perspective of how they should be trading. Well, first up, I have on my screens, I think, there is Gyan Prakasham, who wants to know your view on Indian Bank. So we'll try and, give him what the charts are really placed for Indian Bank, and if, how would you ask whether he should be buying, selling, or if he already has it, should he be accumulating more or hold on to it? What would you suggest?
Yeah, so I would suggest him to continue to hold longs because comparatively it is better within the PSU pack because still maintaining above the 100 EMA. So 540, that should be a closing stop for this stock. Once we cross 565, then we can see fresh momentum towards 590 also. You can stay put with 540 being the closing stop.
Right, so keep that stop at 540 for Indian Bank. Since we are in the similar space, Satya CK wants to know your view on a Fino Payments Bank. Maybe not similar space, but okay. But from the 6 to 12 month time frame, what would you suggest to the likes of a Fino Payment Bank?
So this stock has finally gained some traction after spending almost a year under consolidation range. So it's a decisive breakout that we saw last week, very strong volumes. So I expect this stock to gradually inch toward 500, 520 zone. So if your time horizon is, let's say, for 6 months, you can stay put. And on the closing basis, now it should not breach and sustain above 380. Otherwise, the buyers would again turn negative. So that should be a stop, and around 500, 520 area, you should partially book profits.
Right. Okay. There's another one coming in, and we perhaps might not have that much data because this is a newly listed company. But for Saraswati Sari Depot that listed and it saw some good benefits, Gautami wants to know whether she should keep holding it for another month or so, or whether she should exit the likes, because of course we do not have much data to be discussing this. But technically or even fundamentally, what would you suggest, Ajit, that one could do with the likes of a Saraswati or SSDL?
If I can recall that we had a neutral rating on this stock in the IPO note, and since you have rightly mentioned that we have very limited data, so we can't comment from the basis of short term.
Right. So we won't be able to tell you much, but you'll have to wait it out. If you have got that allotment, maybe you should try and, look at how the companies really, if they put out more data of their earnings and the others, maybe you can then take a call on that. Well, the next query is from Rakesh. He wants to know your view on KPI Green Energy for a fresh entry level. Is the current level a good level to enter KPI Green Energy? And maybe you can also take this a little broader after answering this query on the whole renewable energy space, because that's also a space that is seeing a lot of traction. Last week there was news flow around Adani. Now there's more news flow from this whole. We are seeing a lot of these companies come into the highlight. Are there any other recommended picks within this space that you would have? And what are the charts really saying for KPI Green?
So KPI is a very tight range, consolidation that we are seeing in the stock. Is made multiple attempts to cross the upper band around 1,050 area, but couldn't sustain. So this indicates that we might see more of time-wise correction, and probably price-wise also, in case if it fails toward to 850 mark. So fresh buying is something that I would recommend to avoid until we again decisively cross 1,050 levels. Then you can definitely look for fresh long, with 950 being the stop and 1,200 being the target area. But in the interim, JSW Energy is something that we like, because the stock has already seen a decent correction last 2.5 months of sideways move. It has anyways reclaimed short-term averages and looks set for the next leg of the up move. So here you can definitely look for short-term buying opportunity, with 685 being the stop and 770, 780 as the target zone.
Interesting. So among the power stocks, those are also something you can note. And in fact, one we can also talk about is Reliance Power. Of course, there's other news flow that has come, SEBI putting that order in place about how they're going to be reacting to those Anil Ambani group of stocks. But any suggestions for Reliance Power? Nayank wants to know, can he hold it for a long-term perspective? Is there anything that you would suggest on Reliance Power?
Mayank, we were seeing recovery, and there were certain news related to Reliance Power also last week with the acquisition from Adani. But it seems like that post this news of action on the promoter, so we can continue to see the stock reeling under pressure after this recent surge. So if you have any short-term bets, I feel that it's prudent to switch to JSW Energies and exit your position from Reliance Power.
Right, so you can keep this. Now remember, this is whole to do with SEBI that passed that final order on August 22nd in respect to the Reliance Home Finance as well as others. They did see that Reliance Infra was send these notices to the party to the proceedings before SEBI, in which the order was passed. Now no direction have been given in the order against Reliance Infrastructure per se, but you did see that stock react, and in fact even now you're seeing that on your screens there locked down. Another stock that you could be watching out for is now Apollo Hospitals. We saw that among your top laggards in trade today. Now that's after Nomura has gone on to downgrade the stock to a neutral form, a buy call. The target though has been raised to about 6,856 from the 6,724 target that it was placed earlier. So just about a few hundred rupees that they've increased there in the target, but they have downgraded it to a neutral call from a buy. Now they do see the rise in hospital profitability to be gradual from here on. The digital segment growth so far has been underwhelming according to them, at least for Apollo Hospitals, and the valuations continue to remain at a premium to most of their other industry peers. Now the limited opportunity, they say that there are limited opportunities to expand even in terms of capacity of their existing hospitals, and they expect the expansion to be a drag on the EBITDA margins in the near term, and which is why all of this concerns is what has put pressure on the stock as well. Ajit, how would you look in Apollo Hospitals? If it is down and about, would there be good opportunities to be buying it in the long term perspective? Because even what has been pointed out is from a near term perspective, but something on an Apollo Hospitals, how would you be reading that?
Yeah, so certainly I would recommend utilizing any correction from the current levels to accumulate the stock, because we are almost on the verge of breakout from last 6 months of consolidation. The stock is anyways trading at the record high, so any kind of consolidation or breather around this level, it seems like a fresh buying pivot. So as of now, we are seeing that this 66-6500 zone maintaining a very strong support. So even if you have an existing position, you can continue to stay put with 6500 being the closing stock. And the next run, based on the consolidation pattern, we can inch towards 74-7500 levels in next 6 months. So yes, it's a buy and dip candidate until we break close below this 6500 mark decisively.
Right. I'll try and squeeze in two more queries if I can. I think there is one coming in on IRFC. Hemant has bought IRFC at around 194 rupees. So he's asking what should be the next target that he should be looking out for.
So IRFC, after the phenomenal surge, we are seeing this stock, trading in a very tight range. So it seems like that this sideways stone might continue until we close above 190. So if you have any existing position, your strict stop should be at 175. Once we break that mark, this bias would turn from positive to negative.
Right. So look out for that 175 levels. We are trading somewhere around 182 on an IRFC. So I hope that, you can manage to track those, that stop loss for now. Another one I'll try and put in here. Nancy wants to know your view on Hind Zinc. This one too has seen quite a good news flow in the past few, last week there was another, dividend announced, and also the whole pairing of stake from Vedanta that happened. So how would you be reading Hind Zinc at this point?
Yeah, so interesting to see what the metal stocks are going to do, because we are seeing strong recovery in the base metals. So that is reflecting, or has started reflecting in some of these metal names. So for Hind Zinc also, I feel that the negative, at least for the short term, is over. And we can see any rebound toward, let's say, 555, 560 area in the near future. So you can stay put, you can buy fresh with 505 being the stock.
Right. Well, Ajit, is there anything else that you are keeping on your radar or especially looking out for, and that you'd want to recommend for our viewers for today, or at least for the rest of the trading week?
So HUL, Stacey, should be on your radar, because it's been almost nearly 3 years of consolidation which has ended. We have already seen stock like ITC, Colgate doing exceptionally well. So I feel it's time now for HUL to participate in the move, and the risk reward is very strong in HUL at current level. So 2740 should be your stop. if you are planning any short-term trade, and 3,100 should be your immediate target. Another stock that we like is from the IT space, TechM. We are seeing fresh momentum. The stock is already at the record highs. So 1590 should be your stop, and you can wait for 1650, 1660 as a position target.
Well, so HUL and TechM is what Ajit has on his radar. Well, let me also take this opportunity to thank Ajit Mishra there from Religare for giving us his time, helping our viewers with their queries, as well as, give us a sense of which stocks and sectors that you could be looking out for. Thanks so much, Ajit, for giving us your time this morning.
Thanks.
Well, also now to another important news update that has come in over the weekend. We did see the cabinet that has gone ahead and given its nod for the implementation of what is called the Unified Pension Scheme, or UPS it will be called. This is a reform that is aimed at benefiting close to around 23 lakh government employees. Now, the new scheme is, in addition to the gratuity that you get, you will also be including a lump sum payment upon your superannuation. Now, some key features of this pension scheme include the assured pension, where employees will receive half of their average pay from the last 12 months before their retirement, as well as if they've completed 25 years of service. So this is an interesting feature that people will be looking forward to, because you are going to get almost half of their average pay of just that 1 year before retirement, and this especially if you've completed 25 years. Now, also the spouses will be assured a 60% of the pension amount in case that of an employee's death as well. This was an ask that was put forth in the various different forms that this scheme has taken before, but now the government actually giving into it and saying that there will be that minimum guarantee as well, or minimum wage to this one. The minimum pension amount kept at around 10,000 rupees a month upon retiring, as well as you remember, the employees right now will be given the choice to make this distinction between whether they want to be in the new pension scheme or the already existing pension scheme, or NPS that we have for the next year at least. And remember, this will be effective from 1st of April 2025. We are seeing insurance stocks, react quite differently to the news. You are seeing the likes of an HBS and HDFC Life, as well as an SBI Life today among your laggards. But this has been a contentious issue, one would say. There were stocks of an OPS. There's now what you're going to be called a unified pension scheme. So we will wait and see how this really pans out. Of course, stocks will be reacting differently, but for the common man, for a government employee who is going to retire, this is something that has been an ask and has been delivered in some form, we could say. Well, with that, for now, markets seem to have been on that little, continuing to be in that range, we would say, but managing to stay above at least those 24,900 levels that we opened up with. So we are there about 100 points, 120 points of gains for the Nifty 50. The Sensex also managing to climb up to that 81,500 level. So good, close to 400 points on the Sensex that we are leaving off at. And we are just starting the week, so we have the whole week to see whether we manage to touch new record highs, or we see some bit of consolidation at those higher levels. Whether there will be some bit of profit taking, that is always something that you need to be watching out for. But with that, it's a wrap and a goodbye from the entire team that puts this piece together. Thank you so much for tuning in every morning, writing to us on our live feed so that we have your queries answered. But for the other feedback, do let us know in our comment section below, and also follow us on the link at the bottom of your screen for all of your other business as well as financial updates, and otherwise, you know where to come to. Moneycontrol.com as well. Moneycontrol app has you covered there. I'll see you again soon.